Are rate cuts really bullish for the market? Now, there are three things most investors get wrong about that. And number one is that everyone already knows the cut is coming. So if you check out the Fed Watch tool website, it shows you that the market is already pricing in a 25 basis point cut with more than 100% certainty. That means the cut itself won't shock anyone. The only thing that could shock the market is if we either cut more or less. Number two is investors overvalue cuts in the short term and undervalue them in the long term. So usually what you will see is that right after a cut with a similar macro environment like we have right now, that the prices jump but then also slowly fade again because there's no fundamental value backing that upside yet. But usually up to 6 months after the cut, especially when the unemployment is still low like it is today, prices are slowly starting to increase. So this was most of the time extremely bullish for risk assets. Number three is that it's not the first cut that matters, it's the path of cuts. So if you have just one small cut on its own, this will not change the economy. What really drives risk assets is whether this turns into a cutting cycle and how far the Fed goes. And this is what people always talk about when they analyze like the talking of Powell. You want to check out if he is mentioning or if he's saying something like, okay, the economy is developing in the right direction. We have looked at the data and the data is good, something like that, and something in this direction. So you want to understand if Powell is hinting further rate cuts in his speech. And the only thing that you can really be sure of this week is crazy volatility, and volatility cuts in both ways. So either prices go up like crazy or crash lower. So I urge you to stay away from leverage this week because in general, it's a bad idea. This week, it's probably one of the worst ideas you ever had in your life.